There were two moments when the euro came closest to blowing apart in the final year of the Eurozone crisis. To understand just how volatile that last year was, take a look at this chart of the yield on Italy's 10-year bonds. Greece may have produced most of the drama, but for the decision makers, it was this chart, how high a price Rome had to pay to borrow money in the markets, that determined whether the euro would live or die. If Italian borrowing costs got so high that it no longer could raise money at acceptable rates, it would need a bailout. And Italy was just too big to bail. Its sovereign debt stood at nearly 2 trillion euros. There simply wasn't enough money in the developed world to rescue Italy. In all these dramas, one leader stood at the center of the storm, Angela Merkel, the German chancellor. It was she who drove the path taken, and it was she who the American president and European bureaucrats attempted to influence. As it always seemed to in the Eurozone crisis, it was an event in Athens that triggered the first panic of that year. After agreeing a new 172 billion euro bailout that included the largest sovereign default in world history, George Papandreou, the Greek prime minister, facing near riots at home, decided he'd put the deal up to a national referendum. His fellow leaders who just negotiated the deal days earlier were furious. They summoned Papandreou to a Group of 20 summit that was about to start in Cannes, France, and made it clear any referendum would have to be on euro membership, not on the bailout and its conditions. They succeeded. Days later, the referendum was dropped, and Papandreou's career was finished. But while the Greek drama unfolded, things far more consequential were being attempted behind closed doors. First, Christine Lagarde, the IMF chief, backed by Merkel, tried to get Silvio Berlusconi, the Italian prime minister, to accept an 80 billion euro line of credit. She failed. The Italians wanted no part of it. Then, on the last night of the summit, US President Barack Obama, with the help of his French counterpart, Nicolas Sarkozy, attempted to get Merkel to agree to a massive increase in the Eurozone's rescue fund, using resources normally held by the IMF. It was a convoluted plan, and one that the Bundesbank, the German central bank that controlled Germany's IMF contribution, refused to back. At the Cannes meeting, which many described as the absolute nadir of the crisis, both Obama and Sarkozy pushed Merkel so hard to accept a plan that her central bank had vetoed that, according to multiple people in the room, the German chancellor broke down into tears. It was an event several in the room said they would never forget. On the way out, the White House photographer captured Obama, putting his arm around Merkel, as if to comfort her. The failures of Cannes pushed Italian borrowing costs to euro-era highs, and it left European leaders scrambling for solutions to save the euro. 5 months later came the second crisis, which almost broke the Eurozone apart. Back-to-back Greek elections, in which voters appeared ready to back a government that wanted out of its new bailout conditions. The first election proved indecisive. In the weeks before the second election, panic set in. Greek depositors started pulling billions out of their bank accounts. Eurozone leaders went so far as to ready a secret plan, codenamed Plan Z, in case banks collapsed and a new currency had to be introduced. Italian central banker Mario Draghi, the new ECB president, went so far as to tell EU leaders in a secret meeting that the central bank was not prepared to pull the plug on Greek banks. If they collapsed, it would be politicians who would have to make the call to stop emergency assistance and force Greece out of the euro. In the end, Greece's mainstream parties eked out a victory, and gradually, Merkel began to win the things she needed to ensure a similar crisis would not happen again. Tough budget rules were put into national constitutions through a new fiscal compact. A European banking union was agreed. Both had been backed by Draghi, in what some officials believe was part of a year-long political cultivation of the German chancellor. And the sea change in Merkel's cautious thinking really came in September 2012, when Draghi declared he would do whatever it takes to save the euro and launched a new program to backstop all Eurozone sovereign bonds.
We will do whatever it takes within our mandate to have a single monetary policy in the euro area and to maintain price stability in the euro area and to preserve the euro. And we say that the euro is irreversible.
And decisively, Merkel backed Draghi, this time over the objections of the Bundesbank. That same summer on holiday, she had also come to the conclusion, after weeks of internal deliberation, that Greece should stay in the euro, even though her own finance minister was arguing in favor of so-called Grexit. The fallout was too unknowable, she would tell aides. In a highly symbolic act, in October 2012, Merkel visited Athens. For many involved in the Eurozone crisis fighting, it was as if Merkel were sending a signal that she, too, would do whatever it takes to save the euro. Peter Spiegel, Financial Times, Brussels.